with a yes. Good evening, everybody. Perfect if you can hear me. So I want us to start on our blocks. Whatever is pending, about 20 pages that we shall be able to cover in the course of the week. Most likely on Sunday, we shall be able to cover what is pending so that we just fully embark on revision. Precisely today, I wanted to start with revision on topic 1. That is what we call the nature and purpose. We call it the nature, what we call the nature and purpose of an audit. And if time allows us, we go to assurance. If time basically allows us, then we pick on assurance. I want us to pick our first question. I want us to pick our first question. That is April 2022, question April 2022. That is question 1A. April 2022, that is question 1A. April, and I want us to be very keen. April 2022, question 1A. Question 1A. Together, if you're there, we'll respond with yes. Do you have the question? Do you have the question? April 2022, question 1A. April 2022, question 1A. Question 1A. We give it a yes if you're there. We give it a yes if you're there. We'll respond to the yes. Let's not waste time. Let's speak on the question. Perfect if you're there. So I read the question. So the examiner tells us that your firm has been engaged. Your firm has been engaged in auditing small entities for the last 5 years. In a recent development, your firm has been appointed to conduct an audit on large entity, which is the first assignment of such magnitude, which is the first assignment of such magnitude. So the examiner tells us that a firm has basically been engaged in carrying out small audits. However, it has been appointed basically to carry out what we call an audit of a bigger magnitude, that is a large firm. You are required to undertake what we call an interim audit and what we call a final audit of a large entity. So you're basically required to carry out what's called an interim audit and a final audit of a large entity. Number one is to understand that what is an interim audit? What did you say is an interim? When you say interim audit, what is an interim audit? What is an interim audit? When you say interim audit, what do you basically mean when you say interim audit? So these are basically audits that are carried before the end of the financial year, before the end of the financial year. Together, when you talk about interim audits, they're basically carried out. We understand that carried out before what they call the end of what they call of the financial year, before the end of the financial year. If the year ends in December, we can carry out an interim audit, can be carried out maybe in July. An interim audit can maybe be carried in May. That is an interim audit. What did he say is the purpose of an interim audit? Why would the firm engage in what they call an interim audit? What did you basically say? Why would the firm basically engage in an interim audit? What is the essence of an interim audit? Basically to help you do what? It makes work easier when you're carrying out your final or end year audit together. So now what is the final audit? When you say final audit, what is a final audit? When you say final audit, somebody to give us the meaning of a final audit. What do you say is the final audit? When you say final audit, Zipporah, what do you basically mean by the word final audit? We respond very fast so that we pick on our first question. What is a final audit? When you say final audit, what is a final audit? Virginia, Jaffa, because this we have done at the end of the financial year, done with the sun at the end of what we call at the end of the financial year. Basically done at the end of the financial year. Done at the end of the financial year. So the first question that the examiner brings to our attention, the first question that an examiner, that question is about how many marks? That question is 14 marks. So explain the objective. I explain the objective. Explain the objective, we're being told, of an external audit. So one of it to explain what call the objectives of what we call of an external audit. External audit. What is the objective of an external audit? Why would you just rely on an internal audit? Why do we need an external audit? Why would you need an external audit? So we basically say that the primary objectives of an audit is basically to give an opinion on the financial statement altogether, whether they portray what we call a true and a fair view. But you're saying that why would you carry? In most organizations, do you think we have internal audit? Do we have internal audit for most organizations? Yes, we do. But why do we supplement an internal audit with an external audit? Yes, that is to give an opinion. All audits will basically be aimed at giving opinion altogether. So that's the general point of view when you say to portray a true and fair view. What is the objective of an external? Yes, it gives an opinion as one of it. What will be an objective of an external audit? Credibility. It basically enhances credibility, enhances what we call credibility of what we call of the financial statement, prepared by what we call management. Enhances what we call credibility of the financial statements that are basically prepared by the management. Why do we always say, for example, that when you ask for audited account, we need external audit? Why not internal? Why wouldn't I say internal? Why external? Davis. Why wouldn't I say external? Why wouldn't I say internal? Do you think if I'm given internal audits, would they be credible enough? Would you think as an investor, I would rely on external audit? Internal audits. Why? Because internal auditor, who appoints the internal auditor? Who basically appoints the internal auditor? Who is he reporting to? The keyword, who is the internal auditor reporting to? Internal auditor basically reports to the management. So therefore, if an internal auditor basically reports to the management, a lot of it is under control of the management altogether. Together is basically under the control of the management. So again, why would we? What is the objective? To protect what's called the interest. We say to protect. We say to protect what we call the interest of what we call of the third parties. Who are third parties? To protect what's called the interest of the third parties who are not involved in the management, who are not, we say involved in what call in the management, to basically protect the interest of the third party, banks and creditors. Yes, perfect. To protect the interest of third parties who are basically not involved in the management. Perfect. Again, what would be an objective apart from the two? Apart from two. Those audits act as a preventive, basically we say act as what we call as a preventive, measures. We call it against what call fraud and errors, act as a preventive measures against fraud and errors. External audits basically also as an objective enable us to facilitate. It basically facilitate what we call bank loans. Facilitate what we call bank loans. Is that true? They facilitate bank loans altogether for an organization. An organization can basically use the external audit to facilitate what we call a bank loan. So those are the objectives of an external audit. Together. Is everybody together with me? If you're together, we give it a yes. Tuko pamoja. Maybe a question at the back of our mind to ponder on. So what is the difference between internal versus what we call external audit? What is the difference between what we call the internal and external audit? This is something that you should basically look at. Do we have that in our notes? Do we have that in our notes? The difference between internal and the external audit. You can look at that. So we proceed to the next question. We proceed to what's called the next question. Highlight audit procedures. Highlight what we call audit procedures. Highlight what we call audit procedures. We'll say highlight. That is the next question. Audit procedures. What we call audit procedures. Highlight what we call audit procedures. Procedures. Highlight what we call audit procedures. You would undertake. You'd undertake during an interim audit procedures that you'd undertake during an interim audit of what we call of a large organization. During an interim audit of a large organization. When you look at AA is not more, most of the questions are very direct, not very technical, or more twisted like the advanced auditing. Most of the questions are very direct. So we say that the interim audit is basically carried to make work easier. Are we together? To make work easier, to basically make work easier, to make work easier, to make what we call work easier in preparations of what we call of a final audit. So what do you think are some of the procedures that will be basically carried? Some of the procedures that will be basically carried. Audit procedures. We did talk about audit procedures. So what are some of the audit procedures that are being carried in? Yes, we have substantive testing, but unlimited. You see, if you have the interim, yes, we carry this substantive testing, but basically they're limited altogether. The essence is that they're basically limited. So we say we'll carry those audit procedures, for example, detailed testing substantive, but if the one is limited, we call it substantive testing. This is one of the tests that you're going to carry out on an interim audit. Limited, we call it the limited substantive testing. Ascertaining, yes, ascertaining. You ascertain the internal control system. Perfect, that's a very good one. We call it ascertaining. We can talk about recording and evaluating the system. You'll also do the recording, what you call recording and evaluating, what you call evaluating the system. Recording and evaluating the system. That is very key in all audits. Are we together? Recording and evaluating the system. ascertaining, and what we call evaluating the ICS. The ICS. Somebody talks about vouching. Vouching. What is vouching? When you say vouching, Ida. Some are vouching. What is vouching? And you talked about vouching when we talk. We have touched on vouching a number of times. We talked about vouching, inspecting altogether, tracking a transaction from the origin, tracking transactions from the origin. The only difference is recording. This is more or less the same. The only difference is recording. So we can talk about recording the same system together. Recording, ascertaining, and recording are differences. The only difference is recording. Are we together? Apart from that, again, on an interim audit, because you are making the work easier together. As an external auditor, one of the things that you do, you'll be looking at the weakness together. Are we together? You'll be checking the weakness in the system, and you are recommending it for improvement. Are we together? Notifying the weakness of notifying what called the weaknesses. The weaknesses, we say in what we call in the system, and we recommend, we call it recommend what we call improvement. Because what do you want? The essence of this is to make work easier for you at the end of what? At the end of at final audit together. Remember, you're the one doing what? You're the one carrying out the final audit. So why would I carry an interim? So I'll be looking at weakness that basically emanate from the system, and I recommend what's called improvement together. But again, you can also plan substantive test process, plan what you call plan substantive processes. We call it for the final audit. For the final audit, plan what we call substantive processes for the final audit. Together, we respond with a yes if we are together. If we are together, Kwamboka. Are we together, Kwamboka? Are we together? Perfect if you're together. Our goal is to make this work easier so that when you go to exam, but again, also as an emphasis, AA is not twisted. It is not very twisted. Most of these questions, you realize that they're more or less the same. The more or less, a few questions are twisted, but most of them. So then we're being told that describe 5 audit procedures you'd undertake during the final audit of a large entity. 5 procedures, we call it 5 procedures. Procedures you would undertake during what we call the final audit, during the final audit of a large entity. During the final audit of a large entity. What are these procedures that would basically be taken during the final audit of a large entity? Back to Ida. Ida, when you talk about vouching, why would you carry vouching on the interim? Vouching most of the time would be carried on the farm. Are we together? Would be carried out together. Vouching would definitely be carried out together. Would definitely be carried at the end. Are we together? Why? Because at the end of the day, when you carry out what we call an interim audit, there's a likelihood of alteration. Are we together? Alteration can basically be done to those audits that are done in the interim together. So again, we can talk about what we call final substantive testing. We can have what's called final what we call the final substantive detailed testing, substantive testing, what we call the final substantive testing. We can also have the vouching, and vouching is what we call trailing, tracking, stroke trailing what we call a transaction. We call it trailing a transaction from what we call from the origin, from the origin, from the origin, from the origin. Yes. Updating, we can also have updating auditor knowledge, updating what we call the auditor's knowledge as updating what we call the auditor's knowledge, auditor's knowledge. We call it the auditor's knowledge, updating what we call the auditor's knowledge. Poleni sana. I don't know whatever is happening, but it should not mess us up. So you can update what we call the auditor's knowledge about the client's ICS altogether. Then at the end of it, you carry out, yes, final ARPs. We also have compliance testing. So final, you can talk about final ARP, then you can have what you call compliance, what you call the compliance testing. You can have what you call the compliance testing. We can have what you call the compliance testing altogether. So you can also determine, again, if what you call the ICS has changed since the interim audit, whether the client internal control systems have basically changed since the interim audit was carried. We respond with yes. Since the interim audit was basically carried. You give me a yes if we're together. Today we are picking on one. I want you to build strength so that on the next class, which is Thursday, I will revise 2 topics. Yes. So together, we respond with a yes if we are together. Perfect. So I can ask you a question. For example, when you talked about external audits, types of external audits. When you ask types of external audits, what are the types of what you call external audits? When you ask, we did talk about types of external audit. Did we talk about the types of external audits? So food for thought. I also want you types of what we call external audit. If you remember these types of what we call external audit. So food for thought on that. Then the last question. On the last question, our system. I don't know what's happening, but it should basically let us. Yes, try. So this internet should not mess us up. So we have what's called, so the last question, particularly on that. So the examiner asked, present 2 drawbacks of conducting. Present what we call 2 drawbacks of conducting. 2 drawbacks of conducting. 2 drawbacks. We call it the 2 drawbacks. Drawbacks of what we call of conducting what we call an interim. Conducting what we call an interim audit. So what are the disadvantages of conducting what we call an interim audit? What will be shortcomings for the drawbacks, disadvantages for conducting what's called an interim audit? So we talked about this at length. Again, it disrupts altogether. Let's say, for example, in an organization, people are working and there is internal audit. There's disruptions altogether. Sometimes it's very costly for a small organization. Disruptions, we have what we call disruptions. So these are very costly for Smaller organization. For small organization, it is not a wise thing to do to carry out interim audit. For smaller organization, very expensive or costly for smaller organization or average business altogether. Not even smaller, but an average business, it will be very expensive. It will be very expensive altogether. Figures already audited can be altered altogether. Figures already audited with the standard figures. Figures, we say already audited, we say can be altered. So the figures that you work tirelessly to audit can basically be altered altogether. Are we together? Are we together? Maybe altered. Together, maybe altered. But again, if you look at it keenly, one of the dangers of it is that when you have an internal auditor, you can realize that the staffs of the client may basically depend on an auditor to solve their problems altogether. The staff of the clients may definitely depend on an auditor basically to solve their issues. While in real sense, Lillian B, we basically understand that the role of an auditor is basically to provide an opinion. Having an interim auditor in an organization, basically, the staff of the client may basically place reliance on the auditor, basically to solve what they call to solve their issues. We respond with a yes. And we have them in the notes. Do we have those things in the notes? Do we have them? Perfect. I want to pick a very present question. That is April 2025. I want us to pick a very present question. A very present question. So that should be April 2025. April 2025. It's a question on historical audits. April 2025. Do we have that documentation? That paper? April 2025. April 2025. April 2025. April 2025. That is question 1A. Question 1A. If you're on it, we respond with yes. April 2025, question 1A. So an examiner asks us, I like 6 inherent limitations. I lied what we call 6 inherent limitations. Inherent limitation of an audit of what we call of an audit of historical statements. Of an audit of historical statement. Historical statements. So the key one there, very likely to disturb what we call historical statement. Historical statements. We'll say historical statement. Or we can talk about historical audits. So what would be an historical audit? Or the historical statement? So when you say historical statement or an historical audit, so what is an historical statement? Audit of an historical statement. historical limitations. We say that limitations of audit of historical financial statement. So whenever we talk about historical audit, whenever we talk about historical audit, we basically understand that this is what we call examination, of what we call the financial statement of what we call of the past period, of the past period, of the past periods. So say that examination of financial statements, examinations of organization financial statements of the past period. So what are the inherent limitation? Inherent limitation. What are the inherent limitation of basically examining financial statements of the past period, of examining what we call the financial statements of what we call of the past period, of examining what we call the financial statements of the past period. Why not reliable in making judgments? Why? Why? You've talked about change in management. So one of it, an auditor can rely, we understand that auditor can rely on what we call on judgment, that we understand that is subjective. An auditor can basically rely on judgment, which is basically suggest judgment that is subjective. But apart from judgment, we can also talk about accounting estimates. We understand that accounting estimates that are very subjective are together. That is subjective are we together. And differ among professionals. And you say in differ, we understand differ among professionals. And differ among professionals. That is the first limitation. That if you audit, for example, if you audit financial statements for the past periods altogether, audit of the past period, you may rely on a judgment or what we call accounting estimates that may differ among what we call professional together team, that may differ among professional together. We respond with a yes. That is the first limitation. If you look at the past audit, we respond with a yes if you're together. Perfect. The next would be what we call management overrides. Management, what we call management, we understand that may override or may override what we call controls. So the management may essentially do what? Override controls. How would management basically override control? How would they? What did I say about system? Do you think a system is completely? Do you think a system, all system, do you think there's a system that can provide what you call absolute assurance? Do you think there's a system, whether in Europe or in Africa, that can basically provide what you call complete control? No. The management can basically collude and override the control. That is to say, even a strong internal, we say even what you call a strong, even in a strong ICS can be, we say, overridden by what's called by the management. Even a very strong control can basically be overridden by them. So that those are the limitation. Even a strong control can basically be overridden by the management. Apart from the two, what are some of the inherent limitations? So again, these ones, yes, that is now already limited that on those control. Again, these ones require resources. Is it true that if for you to do even audit for the past, they require what you call resources and time? Are we together? Require cost, limited. We can talk about limited resources and time. For you to carry those historical audits together, for you, perfect, that sampling is a good one. They may use techniques like, which may not be accurate. Perfect, that's a good one. They may use techniques like sampling that may be inadequate. But again, if you carry audit for the past years, again, some of the limitation could be on time and resources. Are we together? Time, because you expected to complete the audit within a reasonable time, but at the same time, they are also costs that are required. Are we together? So that limits what we call audit procedures that can be performed. So when you talk about constant on resources and time, this would basically limit what we call the audit procedures to be performed. This is basically limits what's called audit procedures to be performed. As a limitation, time, the constraint on time and resources, this basically limits what's called the audit procedures to be performed. Together, team, if you're together, you give me a yes. It basically limits what's called the audit procedures to be performed. We respond with a yes. Perfect. We can talk about what they call potential for future events. What they call potential. We call it the potential. We call it for future. Potential for what we call for the future event. So when you talk about potential for future event, we're saying financial statement basically reflect what we call past events and transaction. Potential, we talked about potential for future events. We remember that the financial statement basically reflects what we call events and past events and transaction. Are we together? And therefore, an audit opinion relates to fairness of presentation of a specific time. Are we together? Of a specific time. Are we together? For a specific period. So whenever we are talking about audit opinion, so whenever we say financial statements, those are historical, reflect what we call past events and transaction. But when you talk about an audit opinion, we understand that audit opinion reflects what we call the fairness of presentation of a specific period altogether. Are we together? So when you talk about subsequent events, basically on subsequent events occurring after audit report date, are we together? Could significantly. So when you talk about subsequent events that happens after an audit date, could significantly affect what's called the financial position. Are we together? The financial position after the entity's financial position has been reported could affect what's called, could affect the financial position because assumptions may be varied altogether. Because the assumptions may be varied. So if you carry out subsequent audits altogether, they may affect what we call the financial position that was already audited altogether. Because assumptions may be varied. Are we together? Because assumptions may basically be varied. We respond with a yes. We respond with a yes. Together, we respond with a yes. Perfect. And one last one from the students. One last one from the learners. One last one from the learners before we pick on the next. One last one from the learners. 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 So we also talked about sampling risk. So Kombaka talks about sampling risk. As the last one, Kombaka gave us his sampling risk, where we say audit a sampling technique rather than examining transaction, which may lead to missing material. So we say sampling techniques, we say technique or procedures. Auditor may use sampling techniques or procedures rather than examining every transaction, rather than examining what's called every transaction, which may lead, we understand may lead to missing material misstatement, which may lead to missing material misstatement. Together, we respond with a yes if we are together. We give it a yes if we're together. If we are together, we respond with a yes on that particular question. We respond with a yes if we're together. Yes, pressure from the management. Pressure from management is also a very good point. So we can conclude on that. Together, Davis, tuko pamoja. Brian, are we together? Thank you. Rachel, are we together? Perfect, if you're together. Picking another question. December 2021, that should be December 2021. December 2021. December 2021. December 2021. Question 4C. Question 4C. December 2021. We have it as question 4C. December 2021, question 4C. December 2021, question 4C. December 2021, question 4C. December 2021, question 4C. Have we opened that? December 2021, question 4C. If we are there, we respond with a yes. Perfect, if you're there. So on December 2021, question 4C, I scroll that. So we are being told, so we look at that, more of an application question. So we're being told that Relax Hotel, I hope is the question, Relax Hotel. Are we on it? Are we on it? Are we on it? Perfect. So I think that Relax Hotel and Cottages Limited is your new client operating in hospitality industry. The company management has indicated to you in the opening meeting that internal control is critical to their business profitability, especially during the recent economic downturn. You're required to understand the company's internal control environment before commencing an audit. So in relation to the international standards on auditing, that is the ISA 315, identifying and assessing risk of material misstatement through understanding the entity and its environment. Though that is on ICS. Have we done internal, what is control environment? Control environment, we say it is a component of, control environment is a component of an ICS, internal control system. Are we together? Other components of an ICS, what did you say? Is that in the notes? Though that is not part of topic 1. Do you have that? Components, the 5 components of an ICS. If we remember, Joy, control environment, control activities, monitoring, monitoring. The 2 that are remaining, we say control environment, control activities, monitoring, risk assessment and analysis. And the last one is what? And the last component is what? Information. Are we together? The last component, so that we have that. But of essence was basically on the risk. Of essence was basically on the risk altogether. Examine 6 factors that will change in the inherent risk of Relax Hotel and Cottages. So I want us to define these 3 risks altogether. There's what we call the inherent risk. We have what we call the next, what we call detection risk. This is what you need, but I just want us to define this. Then you have what we call control risks. So number 1, we start with what we call the inherent risk. What is an inherent risk? Well, so what did you say is an inherent risk? If it has defined inherent risk. So say the likelihood, this is what we call the likelihood of accounts balances. The likelihood of account balances, either we say individually or aggregated with others. So the likelihood of the accounts balances either individually or aggregated with others, to be materially misstated, misstated, assuming there is no control, assuming there is no control. Together, assuming that there is no control. So when you talk about control risk, this basically comes as a result of the internal control system. So when you talk about detection, these are auditors' procedures. Are we together? These are the result of auditors' procedures. Are we together? But you're not asked on this. So control risk, basically it relates to the ICS. Is it enough? Are we together? This is where the internal control system is weak. And this happen detection risk happens as a result of auditors' procedures being inadequate or poorly designed. But when you talk about inherent risk, we say the likelihood of what we call account balances, either individually or aggregated with others, to be materially misstated, assuming there is no control. Together, team, we respond with a yes if we are together on that definition. So what are these factors? What are these factors that can lead in the inherent risk? So account balances to be either individual or aggregated to be materially misstated, assuming there is no control. What are those factors that can lead to that? What are those factors that can basically lead to that? What are the factors that can basically lead to that? What are those factors? We talked about them. What are those factors? Issues to do with management competence, management competency. When you have an incompetent management, so management competency, we also have issues complexity of our accounts are being prepared, complexity of how accounts, we say accounts are being prepared, complexity of how accounts are being prepared, management integrity, Another one, two more. Factors affecting the industry, what we call factors affecting. Call it affecting what we call the industry. Factors that affect the industry. Factors that basically affect the industry. Change of management, perfect. Change of management. Change of what we call of the management. Change of what we call the management. Change of the management together. So those are the factors that will basically volume or and the number of transactions. Yes, volume. That's also very good. Volume and what's called the number and the number of transactions. I must assure you that how do you approach these questions? I believe one of the most key things in answering questions altogether, you can be asked, how should you approach this question? That is number one. Are we together in an exam scenario? Because that's where majority of the students basically mess up. How should you approach these questions? Maybe in terms of examination, how should you approach them? Should you write a very long answers, or you need to be very specific with your answers? How should you approach those questions? Because that's an information that is very important. How should you approach that question? So how should I approach these questions as a student? Number one, you need to be very specific altogether. For example, if somebody was marking this paper, number one, and then you write the whole statement and what I need, are we together? You'll be told by some people write a whole list. No. Even in long questions, there's always what you call a very specific answer, are we together? And as an examiner, what will be key is basically on those very specific points altogether. Those very specific points altogether. For example, if you highlight those specific points, sometimes an examiner, in most cases, will assume that whatever you've written there as an examiner would basically assume that whatever you've written, if this was the point, do you think in most cases you'll have somebody reading that as an examiner? That is my question. Be it PFT, be it audit, yes, it's just the marking point. That person will read. That's why what you need to, as you're writing your points, is to raise what? These marking points. They should be very clear together. In most cases, it gives even a marker easy time. Are we together? It gives them an easy time together. And sometimes along the way, if you don't raise this, it takes long, even for you. So those specific points are very important together. I want to pose a question. This is a question, especially it happens under assurance and engagement. So what is the difference between an auditor and practitioner? Practitioner. What is the difference between these two words? When we talked about reviews and we talked about those other engagement review, audit, or final audits, we talked about these two concepts before we take a small break. What is the difference between an auditor and a practitioner? What is the difference between is an auditor is an auditor accountant. Is an auditor accountant is an accountant and auditor. Komboka. Is an auditor an accountant or is an accountant an auditor? As a food for thought. An auditor is an accountant. What about accountant? Accountant is not not an auditor. Together. An auditor is an accountant, but accountant is not an auditor. Galma. Is that okay? Very good answers here. Very interesting. I want us to get one more question before I give you a break. One more question. One more question. A very good question, but one more question. A question that is most likely to be beneficial to us. A question that is very beneficial to us. A question that is very beneficial to us. Question that is highly beneficial to us. August 2022, question 2C. August 2022, question 2C. August 2022, question 2C. August 2022, question 2C. August 2022, before we get a break, August 2022, August 2022, question 2C. August 2022, question 2C. So do we have the question? Question 2C. If we have it, we respond. August 2022, question 2C. August 2022, question 2C. Are you on it? So perfect if we are on it. So we're being asked in this question, your firm has been appointed as an incoming auditor of Taratibu Motors Limited. Part of the agreement is a proposal of undertaking continuous audit on the company's financial statement. Part of it is to basically undertake what's called a continuous audit on the company's financial statement. This is also very clear. Explain 4 disadvantages of conducting a proposed continuous audit. Disadvantages, what they call disadvantages of conducting, what they call conducting what they call a continuous audit. Disadvantages of basically conducting what's called a continuous audit. Disadvantages of conducting what they call a continuous. If a firm is a disruption of operation, are we together? Disruption of operation, disruption of the operation. Another one, disruption of the operation, costly, very costly, very costly, very costly. Yeah, exposure to, yes, a very good point. Exposed auditor, exposure of auditor to familiarity, RT threat, exposure of auditor to the familiarity threat, exposure of an auditor, then say, yes, reluctance altogether. Are we together? So reluctance of the client staff to do some work. Are we together? Decrease in morale of duty. Yes, reluctancy of the client staff in doing what they call work. Are we together? The morale, the morale for work. Are we together? Are we together? Again, familiarity, as I say, very important. Familiarity. These people work together. Breakdown of work chains. We have what's called the breakdown of work chain. What they call breakdown of work chain. Breakdown of what we call the work chain. Is this thing complex? As we go for a break, is there anything complex in this? Japan, is there anything complex? Yes, dependency of auditor solve the issue. Is there anything complex based on revision that we've started? Is there anything complex in these things that we do? Joy. So far, no. Even as we go ahead, because on Thursday I plan to revise 2 topics. On Thursday, my plan is to revise 2 topics. I was just building. The first class is to build. Yes, the first class is basically to build. Issues in remembering points. The content is wide. This is wide. Are we together? Even when I will be discussing assertions altogether, on assertions and the types of assertions altogether. That is on Sunday. I plan to summarize the remaining part on assertions altogether. How do you verify existence? Types of assertions altogether. But you have to continuously practice. How do I remember the content? I must continuously practice. Lillian B, is everything flowing well? I hope everything is flowing well. Lillian B, is everything working well? Now that we've started revision, I hope everything is working. So again, constantly, I love to inspire class. One of the best ways that we overcome, and in most of the classes that have done well, if I look from those times I've been teaching or lecturing, most of the classes that do well, it's very funny. You people may never understand. Classes that do extremely well are classes that work on those groups perfectly well. As the classes that I've seen work well, or the classes that I've taught and I've seen do very well, are classes that work together. In as much as that has not been able to work effectively, I want you people to create time, work together, send the link. When you're free, it's on a Sunday, and Mwalimu also has time. Mwalimu can join those links so that we create a chain where we are revising and we keep on remembering the content. So we can have our break, then we come back. So why is audit required for a limited liability? Limited liability. So the word limited liability, what does it mean? Limited liability company. So what is the lower limited liability company? So when you say limited liability, owners of the companies are not personally liable for the company's debt. Owners of the companies are basically not personally liable for the company's debt together. But of essence, why are they required together? Reasons why audit of limited liability companies, require. Why do they require audit? Why do they basically require an audit? Some guys have given very good answers here. So to enhance one of it is regulatory. It is a regulatory, we call it a regulatory requirement. One of it is it is a regulatory requirement, which the law requires that the law basically requires that they be audited. It is what's called the law basically enhance credibility. Again, number two, we understand that it enhances what's called credibility. Enhances what's called the credibility. Enhances what's called credibility. Enhances what's called the credibility. Enhances credibility. So we can say identify what's called errors and fraud. The audit basically identify. We say identify what's called errors and what's called fraud. Identify the errors and fraud. Identify what's called errors and fraud. Enhance what's called public confidence. This basically audit basically enhances. We say enhances what I call the public confidence. Enhances what we call the public confidence. Enhances public confidence. Maintaining what's called regulatory compliance. Maintaining regulatory. Maintaining what's called regulatory compliance. Then assessing risk of the management. Assessing what we call the risk of what's called the management. Assessing risk management. How do they manage risk? Assessing what we call the risk management. Those are some of the reasons why we have facilitate filing. Yes, they can also, filing of annual returns. Facilitate, we can have that facilitate, can have it as the last. Filing of what's called annual returns. Filing of what's called annual returns. Together, team, we respond with a yes if we are together. If we are together, we respond with a yes. We respond with a yes if you're together. Perfect if you're together. I want us to pick a question. That question basically as that is May 2016. May 2016, question 2A. That is May 2016. May 2016. We have it as question 2A. May 2016. We have it as yes, some are the same. Some like credibility, errors and fraud are we together. Some points are equally the same, Komboka. That is noted. Yes, some you can objectives of audit together. That should be okay. Kwamboka, I'm saying that should be. Kwamboka, you've not, yes, that should be okay. Perfect, thank you. That yes means a lot. We need to work together. So then we proceed to the next, that is May 16, question 2A. May 2016, question 2A. We open that question. Then I will give you a plan on what we need to do. Plan on what we need to do. Plan on what you need to do. So May 2016, we have it as 2A. May 2016, we have it as 2A. So are we there? May 2016, question 2A. Are we there? May 2016, question 2A. Kindly respond if you're there. Kindly respond. Respond with a yes, kindly. So within all, we are being told, question 2A, I learned two limitations of an external audit. Limitations of an external audit. Apart from the positives of external audit, we're told to highlight what we call two limitations of what we call of the external audit. Two limitations of what we call external audits. Two limitations of an external audit. External audit. Apart from it, bringing confidence, expose the company's financial statements, sampling risk, somebody say inheritance, limitation of ICS, expensive, may lead to a leak of confidential information. Guys, if I look at those ones, they're not far away together. Again, this external audits, like one person says, sampling risk. You don't collect what you call the whole data. Are we together? Do you have a chance to, maybe cash is what you can sample, but most of it you'll do what they call sampling altogether. Most of it, basically, you'll do what you call the Yes, most of it you'll do what you call the sampling altogether. Does not test all, we call all the transactions. The limitation does not test, we say it does not test all the transactions. Does not test all the transaction. Does not test all the transaction. Does not test all the transaction. Again, if you don't test all the transaction, there's emanation of what you call the sampling risks. There is emanation of what we call the sampling risks. Together, team. There's the aspect of sampling because you're picking sample. So there's the risk of what you call, if you don't test all the transaction, But again, the financial statement, you realize may have what you call estimates that are very subjective, other than judgmental matters altogether. So financial statement may contain financial statement may contain, with the sun may contain what's called subjective estimate, may basically contain what's called the subjective estimate rather than judgment matters. Other may contain what's called subjective estimate together. So those financial information that are basically relied on altogether, internal control relied on, may have their inherent limitation that are also given into ICS relied on, may have its own inherent, we call it limitation, may have what's called its own inherent limitation. So the internal control system basically relied on may have its own weakness altogether, may have, but again, also audit may use what's called the historical. This audit may use what's called historical, and financial information may differ from the current one. So again, you may use historical. The data used may be very historical altogether, and may not basically reflect what's called the current one altogether. May be different from the current one. So the data provided may be historical and may not basically represent the current one as a limitation, to get that in, as a limitation. The data that is provided may represent historical, not a current data. We respond with a yes. But you can also talk about it as a limitation. It could also be very expensive altogether. Very expensive to conduct. Perfect. Very expensive to conduct. Very expensive to conduct. Very, very expensive to conduct. Very, very expensive to conduct. It could be very expensive, definitely, to conduct. We pick one more as we wrap it. Something smaller as we conduct. May 2021, question 1A. May 2021, question 1A. A very easy one, May 2021. This one you're doing for me. Question 1A. So open that question and you do it that for me. May 2021, question 1A. May 2021, question 1A. So open that question, and I want us to walk through it together. Then I come up with a way to work it out. With a way to work it out. May 2021, question 1A. Are you on it? Perfect if you're on it. Are we on it? So we've been told that Wakulima Supermarket has appointed your firm as an external auditor for the current financial year. One of the company's director feels that there is no need to undertake what you call an interim audit during the year. He argues that the interim audit is only a way of increasing your firm's audit fee and adds no value. Advise your director on the need of interim audit. Do you have that information in the notes? Do you have that information on the notes? We respond to the yes if that information is there. Is that information there? I know the guys who have not, for those who are very keen, is that information there? So what are some of the, what is the importance of an interim audit? 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 Of an interim audit. What is the importance of an interim audit? Facilitate the final audit as an importance. Errors and fraud may be detected earlier. Client will gain, yes, for efficient and effective, yes, ICS. Another one. Act as a preventive measures against fraud and error. Perfect. So together, act as a preventive measures against fraud and error. You're also able to prepare management letter as early as possible. You're also able to prepare what's called the management letter as early as possible. You're able to prepare what's called the management letter as early as possible. You're able to prepare what's called the management letter as early as possible. Explain 4 assignments to be undertaken. So this we had talked about. So when it's all 4 assignments to be undertaken during an interim audit. In the first question, yes, we did it on the first question. 4 assignments to be undertaken in interim audit. Can we respond, Jaffa? In our first question, we did that. 4 assignments to be carried in the interim audit. So class, I want to plan myself. We did it. One of the things that I always love perfectly well, yes, and no one is perfect, but we always say that you can plan yourself perfectly well together. So I want to plan you so that by the time I am leaving you, yes, that's okay, limited substantive testing. By the time I let you off for exam, it's very important altogether. The first class, the reason why I insisted on revising only one topic on this first class was to gauge where we are. So in the next class, I revised 2 to 3 topics together combined. So what I will do, I will be preparing questions earlier in advance. We prepare questions earlier in advance and we revise 2 to 3 topics. Are we together? If we revise 3 topics, meaning that if you're coming to class, we must be ready. Kwamboka, B, Brian, and the whole class, as we come to class, we have to be prepared. Are we together? So in the next session of our revision, that is on Thursday, we intend to revise 2 to 3 topics. Are we together? Meaning that 2 to 3 topics in order for us to be there. Are we together? And in order for us to attain. And again, the remaining part altogether, I am requesting, this is for the audit class. Sometimes when I come very early in the morning, guys are, you find guys are very tired, but I intend to sort the remaining part. Look up, I love planning myself. Sunday morning and Monday morning. There's some things that I need to discuss on assertions, subsequent events altogether. I need Sunday morning and Monday morning. Please allow me to sort that remaining part of the handout. Are we in agreement? On Thursday, when I take assurance, I'm revising 2 to 3 topics at once altogether. But you also have to be very strategic that we revise about 6 to 8 questions. Very good questions, 6 to 8 questions. And again, I kindly plead with the team. That we get back to those groups. Kindly support Jaffa on those groups. I would also want, maybe on times that I'm not very committed. Yes, for those working. So the Monday, because of what is pending, I will end it by, we say 6:20, 6:20. Together. Perfect, together. Is that noted? We respond with the yes if that is noted. I had my PFT students. PFT students, we were supposed to meet in the morning. Thank you. PFT students, we were supposed to meet very